Right. Ladies and gentlemen, good afternoon and welcome to our final session on the two-pot system. My name is Martin Atiani. I'm from NMG, Retirement Fund and Consulting Division. Okay, today we're going to be basically talking about the two-pot system, how it works, how you can access the money. I've noticed right before we even started the session that there have been questions already pertaining to how people can actually access the money. Hopefully by the end of the session, you will be getting exactly how getting all your questions answered. Before I actually forget, ladies and gentlemen, if there's any questions, we've got a Q&A box, so you can actually list those questions, and then once we're done with the session, you can just we'll go to those questions, sorry, and answer them one by one. Hopefully, we manage to get to answer all the questions, and if we don't, we will be sending through a list with all the questions and answers towards the end of or mid next week, actually. So what are we going to talk about? The two-pot system, or rather the three pots. You'll understand as we go ahead with the presentation why I keep referring to it as the three pots. Who will be excluded, the withdrawal conditions, how to withdraw the money from the two pots or from the pot, the fees, and point 7, which is tax, the very scary part, one that I really, really need everyone to actually concentrate and get to understand the implications of the tax implications of making such a withdrawal. And then we're going to have a quick Q&A right at the end of the session. Okay, so kicking off, the two-pot system was introduced towards the end of 2021. And it was basically introduced because of two main reasons. I'm sure we can all relate with the situation where you'd find that either a neighbor, colleague, a partner has actually left their employment basically because they are broke and they want to access some money. And the whole lot of South Africans have been taking their retirement fund money because of financial constraints and using that money and battling to actually get jobs. And by the time they get to retirement, they really do not have much money. So access to retirement funds has been seriously restricted. And because it's been restricted, a whole lot of people have found themselves in financial debt. So what has actually happened was the Treasury has realized that the Treasury has realized the situation and they've decided, you know what, instead of people actually going for personal loans and everything else, let us get them to have access from their retirement funds while they're still working, with control, of course, because at the end of the day, we shouldn't forget that this is money for retirement, and accessing this money should only be for emergencies only. So they've introduced the two-pot system to try and get guys to have a bit of access to their retirement fund money. And you'll notice as we go ahead with this presentation that not so much money would be accessible because the whole system is actually controlled, bearing in mind that this is supposed to be money that we're supposed to be only accessing at retirement. So the second reason was basically because a whole lot of South Africans don't seem to have enough at retirement. And what do I mean by this? Stats would always tell you that an average South African changes jobs at least about 7 times within their working careers. And most of us, whenever we change jobs, we never get to preserve our retirement benefits. So Martin works for a particular company, stays there for about 5-6 years, saves for retirement. After 6 years, he withdraws his retirement benefits, starts working somewhere else, starts saving for retirement, stays there for another 3-4 years, and it keeps on going on. And by the time Martin actually gets to his 40s or 50s, he would have accessed his money about 6-7 times within his working career. And this would have a ripple effect in ensuring that Martin doesn't have enough money to actually retire on. So the two-pot system was also introduced to try and control this and ensure that members are forced to preserve going forward so that they could most probably improve their net replacement ratios, which is something that we're going to talk about. So let's talk about this three-pot system and how it basically works. So the first pot is what we call the vested pot. When you talk about the vested pot, we're talking about all the money that you've saved within your retirement fund from the time you've actually started up until the 31st of August, 2024. So Martin started working 20, 30 years ago. He's been saving for retirement. His money is sitting within his retirement pot. All those savings get to sit in what we call the vested pot. If Martin decides to actually resign from NMG, be it now or in the next 3 or 4 years or in the next 10, 15 years, Martin still has access to the vested pot because the old rules would apply. Pretty important that we actually understand this part, because we've suddenly noticed a trend where a lot of South Africans have been resigning after they heard about the two-pot system. People are getting these misconceptions that, well, I cannot manage after the 31st of September, I won't manage to access my money. There is a bit of truth in it, in the sense that you won't access the money that you have saved post the 31st of post the 1st of August, but everything that you saved from the time you started working up until the 31st of August, you will have full access as the old rules would apply. You would still manage to have access for money that you're going to save post the 1st of September, which is a certain portion of it, which takes us to the second pot, which is called the savings pot. Now, from the 1st of September, you're going to have what we call a savings pot, where 1/3 of your contributions will be taken into this particular pot, and 2/3 will be taken into the third pot that we're going to talk about, which is called the retirement pot. So let's give an example here. If Martin is contributing 900 rands per month, right? They will take 1/3 and throw it into the savings pot, and 2/3 would automatically go into the retirement pot. So they'll take 300 bucks or 300 rand, sorry, from your contributions into your savings pot and 600 rands into the retirement pot. Now, if you really get to think of it, this is a new pot that is starting from the 1st of September. Some members already have financial constraints and they really want to access this money. And on the 1st of September, there'll be 0 rands sitting in the savings pot. So what does this mean? People won't manage to have any access. So what they've decided to do is they're going to do what they call seeding, where they're going to transfer a certain portion from your vested pot into the savings pot. How much is this portion? What they're saying is that 10% of your retirement savings within your vested pot would be transferred into the savings pot, but kept at 30,000 rands. Just as an example, if Martin has 750,000 rands sitting within his vested pot, 10% of 750,000 rands would be 75,000. They're not going to seed 75,000 because the cap is 30,000. So they're only going to seed 30,000. If Martin had 200,000 rands before, or 200,000 rands sitting within his vested amount, 10% of that would be 20,000 rands. They're only going to seed 20,000 rands into the pot. That's more like your startup amount. And this seeding is only going to happen once off. Remember, from the 1st of September, you're going to start contributing into this pot. So you're going to have a base of 30,000 rands, and you're still going to be contributing. So if you really need more than that, then you're most probably going to save a little bit more or save for a longer period so that you can access a bit more. Something that we still don't recommend, and you're going to get the gist of it as we go ahead with this presentation. But what we're basically saying is there is a savings pot that's going to start from the 1st of September. Members can actually manage to access money from this particular pot, and there's going to be a seeding amount of up to 30,000 rands, 10% of your amount up to 30,000 rands. If you resign from work after the 1st of September, anything that you have within the savings pot, you can access. If you retire, if you leave employment for whatever reason, whatever you have within the savings pot, you will manage to access. Withdrawals from this pot are restricted, and we're going to talk about it. But one thing I need us to understand is that you are only allowed to make one withdrawal from the savings pot within any tax year. Okay. Then the third pot is what we call the retirement pot. This is where your 2/3 is going to fall into. So if we go back to our example of 900 rands monthly contributions, 300 rands will be placed into your savings pot, and 600 rands would be put into your retirement pot. Bear in mind that any contributions that you actually make into the retirement pot, you only manage to access this at retirement. So if you resign from work, you will not manage to access this amount. If you go, if you're dismissed from work, and if you are retrenched, you won't manage to access the money. The only money that you manage to access is what you have saved up until the 31st of August, excuse me, and what you have saved within your savings pot. Those are the amounts that you'd manage to access. But what you have put into your retirement pot, you will only manage to access at retirement. When it comes to retirement, you only manage to access this money as an annuity. In other words, you get it as an income, be it monthly or annually, whichever annuity that you actually choose. All right. So the three pots, in summary, you've got your vested pot, which is money that you've saved from the time you've started working up until the 31st of August. That money you can access at any time when you leave the fund. And then from the 1st of September, you're going to have two pots, which is the savings pot and the retirement pot. The savings pot, 1/3 of your contributions going forward will sit in this pot. You can access this amount once a year, and then 2/3 would go into your retirement pot, and this amount you will only access at retirement. Now, we've had a whole lot of members phoning in and complaining about the idea that the money that is sitting in the retirement pot, they feel that it is actually not fair not to have access to it, especially for members that are retrenched, which makes a whole lot of sense. So submissions have already been sent through, and the Treasury is actually re-looking at this and trying to figure out whether they can actually be more lenient, especially for the members that are going on retrenchment. Because if you really get to think of it, I've been working for 23 years. I've saved my money, and it's going to be sitting on in my vested pot, right? And then I start contributing into my savings pot and my retirement pot. And I work for another 20 years. All the money that is actually sitting within the retirement pot, I would not manage to access if I get retrenched, if I get dismissed, or if I resign. But if I get retrenched, it's not my choice to actually get retrenched. So there needs to be some form of leniency to make sure that I get to have some form of income. Because in the next 20 years, I will be too old to get employed, but too young to actually go on retirement. Yet I've most probably blown all the money that I've actually had in my savings pot, and I wouldn't have any money to actually live on. So it would be a problem. So submissions have been sent in this particular regard, and members are most probably going to start getting access when they get retrenched. Please don't quote me, but because we don't know how this is going to go, but all I'm saying is that a submission has been sent through to ensure that, to at least make sure that there's some leniency on this. So going back to these three parts, we're just trying to explain them. All right. So as an example, if let's say you've got 150,000 rands in your vested pots, right? They're going to take 10% of that amount and put it in your savings pot. So 10% of 150,000 is 15,000. So they're going to take 15,000 out of the 150,000, put it into your savings pot, so that if you need to access money in September or so, at least you got 15,000. So what this basically means is that in your vested pot, you only left with 135,000 rands. Now, if we stick to the example of a contribution of 900 rands per month, what this basically means is that 300 rands will get into your savings pot, and then 600 rands will be contributed towards your retirement pot. The money that you have actually put in over a long period of time in the savings pot, you can still access. So when we talk about 30,000, 15,000 being put into this pot, it can be more if you leave it to stay a bit longer as you make more contributions and as you get more investment growth. Because I'm saying this basically because a whole lot of members have been asking, so what happens to my money that's sitting in the vested pot? Is it invested or not? Yes, it is invested. You will be getting investment growth on it. And what about my savings pot? Can I actually manage to make 1 or 2 or 3 or 4 withdrawals? You can make only 1 withdrawal within a tax year, which is something that I'm going to touch on again. You can only make one withdrawal. And if you don't make a withdrawal, the money is just going to increase by your contributions plus the investment growth. The retirement pot, is there going to be investment growth? Yes, you're going to get investment growth within your retirement pot. The only difference is that you're not going to manage to access this money. You're going to only access it at retirement. Okay. Now, who's going to be excluded from this pot? We do have members that will most probably start employment on the 1st of September 2024. So these guys would most probably be excluded. When I talk about excluded from the pot, I'm talking about excluded from the vested pot, because obviously they would not have saved anything prior to the 1st of September because they only started to work in September. So all they're going to have is the savings pot as well as the retirement pot. So Martin has never worked all his life. He starts working from the 1st of September. All he's going to have is money that is going to contribute into his savings pot, as well as money that he's going to have within the retirement pot or accumulate within the retirement pot. Martin is obviously not going to have a seeded amount because there's no transfer that is actually coming into the fund. Okay. The other people that are going to be excluded is the members that were 55 by the 1st of March 2021. So we're talking of members that will be 58 by the 1st of September. What we're basically saying is these members are not going to automatically belong to or be part of the three-pot system, but if they want to, they can actually opt in. And they have up until sometime in August 2025 to actually opt in to the three-pot system. Something that we strongly do not recommend, because think about this. We're talking about members that are 58 years and above, right? Those guys, those members are so close to retirement, and it wouldn't make any sense for them to actually start withdrawing their retirement savings prior to retirement. Because basically what will be happening is these members will be stealing from the old men or the old women that they're going to be in the next 2 to 3 years. So it's highly not recommended for members above that particular threshold to actually start making withdrawals from their funds. So we strongly do not recommend it, but the choice is actually up to them. Remember, we also have financial advisors. So if you really need to actually make such a decision, we strongly advise these members to speak to a financial advisor so that they get to understand the implications of making such a withdrawal. Okay. So if you have a benefit in the savings pot, you can withdraw from the savings pot once every tax year. Important, tax year. We all know that our tax year starts from March till February, till the 28th of February every year. So because this process is actually starting in the middle of the year, so members can actually start managing to make the withdrawals from September this year, the seeded amount, which is most probably the only amount that's going to be available, plus whatever contributions they would have made up until up until the end of February. So they can actually make that withdrawal. And the only time that they can start making withdrawals, the second withdrawal, is after March. But every other year, it's going to be between March and February, and you can only make one withdrawal in a tax year. So as an example, 1st of September 1st of September is actually going to be on Sunday. So let's say I make my withdrawal on the 2nd or 3rd of September, and I withdraw the full amounts that I actually have. The only time I can start to make a withdrawal is going to be after March 2025. If I make a withdrawal in March 2025, I can only make another withdrawal after the following March. So in other words, you can only make one withdrawal within a particular tax year. Another important factor is that retirement funds should also not be taken as transactional bank accounts. With a bank account, even if you've got 500 rands, you can just go and withdraw 500 rands and stuff like that. But with this particular pot, you have restrictions. So in other words, there's a minimum amount that you can withdraw. You will not be allowed to withdraw anything less than 2,000 rands, and there's no cap on the amounts that you can withdraw. So if you've got 60,000 sitting within your savings pot, you can actually withdraw the full 60,000, but you can, if you need to withdraw the full 60,000, but you cannot withdraw anything less than 2,000. And this is meant to make sure that this is not treated as a transactional bank account, because now if Martin runs out of taxi fare this month, you will just decide to go to the fund and say, no, I need 150 rands, or I need 15 bucks to actually pay for my taxi fare. It's not going to work like that. So there is restrictions on the number of times that you can actually make a withdrawal, and there's a restriction on the minimum amount, but there's no upside to it. So you can withdraw anything that you have within your savings pot. Okay, withdrawal conditions. So should you have a housing loan against your retirement fund? I'm sure we're all familiar with the housing loan facility where you can borrow money and use your retirement fund as security. If you have that, or if you have a divorce order against your benefit in the fund, or a maintenance order against your benefit in the fund, or if your benefit in the fund is being withheld due to misconduct, we would strongly recommend that you speak to an administrator, and they would most probably manage to tell you how you can actually make a withdrawal and give you guidelines on how much you can actually make a withdrawal. Just using the first example, the first point as an example. If you've got a housing loan guarantee, obviously, when you qualify for the housing loan, they'll actually tell you that, okay, this much, let's say 150,000 rands is what you've actually taken. They need to make sure that even if you make a withdrawal from the fund, you still have 150,000 rands within the fund to actually work as security for paying off the home loan. So all these things, they need to be discussed with the administrator who will make you understand on the details of the deduction and how it's going to work and how much you can actually qualify for. Okay, so pretty important. This is for housing loans, divorce orders, maintenance orders, as well as any monies that could have been withheld because of misconduct. Now, how do we make this withdrawal? NMG has got 3 different options. We've got the traditional option where you can actually fill in a form, submit all those documents, the traditional way, putting in your banking details, proof of banking details, copy of ID. There's the first option, which is the slowest option. But I'm sure as NMG members, you'd also realize that you'd be aware that there is what we call the NMG online portal. I can just, for those of you that would find this new, I'll just open it up. Okay, there we go. You'd get on the first page, they'll require a username and a password. So what you basically do is download the app if you don't already have it. I'm sure about 99% of our clientele also have this. You key in your PIN and password, your username and password, and all your details would actually come up. So how your fund works would be there. Your fund credit would actually show how much money you have within your retirement fund, your vested amounts. It would also show from the 1st of September how much money you have within your savings pot and how much money you actually have within your retirement pot. So this is one way of making this application. So that's a better way than actually going through the traditional route of filling in those forms. The second option will be, the third option, sorry, would be the WhatsApp app that we've got. Very efficient. We've tried and tested it over the past month. So what basically happens with the WhatsApp app is you're going to get a QR code, a number, or a link. You just scan those or get into the link and you automatically get into the NMG WhatsApp, right? You basically start in by typing hi, and as soon as you type in the hi, there's a welcome message. And once you get the welcome message, then you get a menu that will basically show you the different options and how this particular app can actually help you. So the menu will say, A, understand how the two-pot system works, check if I qualify for a savings pot, withdraw, see my fund credit in different pots, withdraw from my savings pot, transfer money between the pots, ask for help. So this app does not just only help members make the application, but it also gives some education on how the two-pot actually works. It also gives you an indication of how much tax you're going to pay, an indication of how much, what the fees associated with this withdrawal would be. So it gives you all the education. It tells you how the vested pot actually works, how much you as an individual actually have within your vested pot, how much you have within your savings pot, and how much you have within the retirement pot. So I like this particular app basically because it gives you some basic information and understanding on the two-pot system, the implications of making that withdrawal prior to you actually making that withdrawal. So we also have systems in place where if you battle to actually get in, there is a number that you can actually call, which is the call center number, the 0861222588, where you can actually call in and they'll assist you with getting access to this. We've been getting a whole lot of members asking how they can to get the WhatsApp number and stuff. All this information will be available from the 1st of September. Remember, basically, because this is not yet live, and we're going to be using this for this particular purpose, so it's only going to be available for members from the 1st of September. Okay, it's not going to only be restricted to this particular project, but it's going to help you with a whole lot of stuff that has to do with all your NMG products. Okay. Now, let's talk about the fees. So the fees that would be charged on this would be 2.5% of the gross withdrawal value. So in other words, if I've got 20,000 rands that I need to withdraw, you need to calculate 2.5% of the 20,000 rands, which works out to 500 rands. Okay. There is a cap on how much you can be charged on the admin fee, and the cap is actually 600 rands. So in other words, if you're going to make a withdrawal of 30,000 rands, they'll say 2.5% of 30,000 is going to be 750, and 750 is actually way above the 600 rands cap, so they'll only charge you 600 rands. Not much, but the scary part is what I'm going to talk about now. And I hope we might reconsider, because I noticed one of the questions was, the first question before we even started this webinar was this platform where you can ask these questions. One of the first questions was, how am I going to withdraw this? How long does it actually take to get the money? Maybe after the slide, you will think twice before you actually make a withdrawal. Right, ladies and gentlemen, the bad news is that there's going to be tax. SARS is going to tax you on your marginal tax rate. What it basically means is, easier way of explaining your marginal tax rate, your pay as you earn. So myself and my colleague might not necessarily have to pay the same tax, because the tax that we get to be charged is based on our income. So in other words, if I'm a high income earner and I pay 41% tax from my salary, when I make a withdrawal, I'll be taxed at 41%. And if my colleague is a low income earner and most probably getting taxed at 18%, 18% is what's going to be applicable. Now let's talk about this. If a member is a high income earner, the highest bracket is 45%. And this member wants to make a withdrawal of 100,000. What it basically means is this member is going to pay 45,000, which is 45%. This person is only going to manage to make a withdrawal of 55,000. Or he's going to manage to make a withdrawal of 100,000 but pay 45,000 rands in tax. The tax that is going to be charged here is ridiculously high. Hence, we strongly recommend that if members are going to make any withdrawals, let it be for emergencies and you've tried other options of getting cheaper money, because the tax that you get to pay here is ridiculously high, because they're using the marginal tax rate. Now, for every withdrawal that you actually make, it has to go through SARS. Okay, then we have to send through a directive to SARS. So whenever you make a withdrawal, whenever you apply for a withdrawal, few documents that you're going to need, including your tax number, send through a tax directive, and SARS does their thing, take whatever it is that they'll be taxing you, and the remainder actually goes to you. And we also get to charge you that fee that I spoke about of 2.5%, or kept at 600 rands. Okay. Now, a few members have also been asking how long this process actually takes. Ladies and gentlemen, if you really get to think of it, thousands of South Africans are going to be making applications from the savings amount. And we're not sure if SARS is already geared up and how fast their systems are going to be. So it could be easy for me to say, from NMG's side, we can actually process your money within 48 hours or 7 days. But remember, we still need to send this to SARS. They do their calculations and then come back to us. And there's a possibility of a delay that might come from there. All right. So it's pretty difficult for me to say our turnaround time is going to be 7 days, 48 hours, or anything else, because we are foreseeing that there could be hiccups when it comes to that. partly because this is also new, that's been implemented, but our systems in place from energy's side are full on, and we're ready for this. Another thing that I need us to understand as well while we're still on tax is that because the tax directive is going to be sent through to SARS, if you're owing SARS, they will start by deducting what they owe you prior to actually making the payment. So in other words, if Martin actually owes SARS, partly because he has not submitted their fines or there's an IT88 or whatever, and I'm making a withdrawal, what SARS is going to do is they'll start looking at, they'll calculate how much tax I'm going to pay, they'll look at how much I owe them, they make their deduction, then the rest is what you actually get. All right, so it's pretty important to make sure that your house is in order when it actually comes to SARS. You do not owe SARS, and if you do, just try and sort it out prior to making any withdrawals. Okay. So we strongly recommend that prior to making any decisions on this, or prior to making any withdrawals, members just need to speak to a financial advisor or play around with the WhatsApp app. Try and get as much information as possible so that when you make the withdrawal, you know exactly what you're doing. You understand the fee implications as well as the tax implications. All right, so that you just make an informed decision. But ladies and gentlemen, just bear in mind that we strongly recommend that you make this withdrawal in cases of emergency, because we all can see that it is expensive money. So this is where my presentation actually ends. I hope we got to have a better understanding of the two-pot system, how it works, how the different pots actually work. That is your vested pot, your savings pot, as well as your retirement pot. I will be pulling the questions now and try and attempt to answer all your questions. All right. I hope I didn't scare everyone with the tax implications of this. It wasn't meant to be like that, but the idea is for members to actually understand what this all means. Okay, got a whole lot of questions. When are we having access to the withdrawals and how? And how long are we going to wait for the funds to reflect on our side? Okay, I think we've answered that question. It was actually the first question that popped up before we started the session. So the answer to that, I think we've given it. What we're basically saying is access to your fund credits, knowing how much you have within the savings pot, that you're going to get from the 1st of September. Let's talk about the 2nd of September, because the 1st is actually going to be on a Sunday. But you will be managing to see the amounts then, but telling you how long the process is going to take will be a bit of a challenge, basically, because we do not know whether SARS has its house in order. But if everything is actually hunky-dory with SARS and everything is actually in order with SARS and they've got their systems in place, it shouldn't take more than 7 working days for a member to get their money. Okay. Second question, when is the next withdrawal date for next year? All right. Remember, ladies and gentlemen, there is no specific withdrawal date. The mere fact that money is actually accessible does not necessarily mean that you have to access it. Okay. All they're basically saying is, no, it doesn't necessarily mean that you have to make a withdrawal. So all they're basically saying is, yes, the money is there. If you've got an emergency, make a withdrawal. If you don't have an emergency, just leave it there. Let it grow. Let it accumulate interest. Put in more contributions if you can and stuff like that. But we can't give dates, basically, because you can withdraw it anytime. From the 1st or 2nd of September, you can make a withdrawal from the pot. But remember, the tax year is going to end from the 1st of March, so you can still make a withdrawal again after March, but you can only make one withdrawal at any time. So the mere fact that it's being introduced from the 1st of September doesn't mean that 1st of September you're going to have to withdraw. You can actually withdraw next year, September, or 4 or 5 years down the line. So there's no specific withdrawal date. You can withdraw anytime you feel like, but it has to be once within the same tax year. I want to ask a question. How do you see you qualify for those 2 pots? If you want to make a withdrawal, which process would you need to follow? Okay, so everyone basically qualifies, unless if you've got the 4 items that I mentioned: a divorce order, housing loan, letter that's did I just mute? Oh, if you have those 4 different aspects, but everyone should actually qualify. There is no credit rating or National Credit Act that is actually used here. As long as you have money within your savings pot, you should manage to qualify. But if you've got a pending divorce order, a housing loan and stuff like that, what we strongly recommend is that you speak to an administrator, verify how much you actually qualify for. So that's one of the advantages of using the WhatsApp app, was once you get into the app and they've verified your details, done the security check and everything, you get in, and then it can actually tell you how much you have as a fund credit. It also picks up if you've got a housing loan, and it would have done a pre-calculation of how much you can actually qualify for from the savings pot. So that can actually help. Hi, how do we see how much we have and how much will the tax be? And I'm left with how much to withdraw. Okay, I think this question has been answered as well. If I'm understanding the question, it's basically asking how much tax you'd be charged, and we did mention that this would be based on your marginal tax rate. So if your tax rate is 18%, then they'll deduct 18% from the amount that you need to withdraw. However, there are certain individuals that might not be taxed. The guys that would be earn 97,750 or less, they pay 0 tax. So those members might not be taxed when it comes to that. But bear in mind as well that that particular withdrawal can actually take you into another tax bracket for that period. So let's say you earn 97,750 per month, but in that particular month, you want to make a withdrawal of 30,000. Obviously, your income would be regarded as 97,750 plus 30,000, which puts you in the 18% bracket. So in that month, you pay 18% for your particular withdrawal. But if you're earning 97,750, less than 97,750, let's say you earn 50,000 per annum and you've got 30,000, chances are you're now going to sit at 80-something thousand, which is still less than the 97,750, which means you're not going to pay any tax. Okay, please explain or clarify how the home loan guarantee will affect my withdrawal. Okay, so let's say Martin's got a home loan of 150,000 or 200,000, and my fund credit is 220,000. There's no way I can, my fund credit sitting within my savings pot is actually 220,000. And that's most probably the only money that I actually have and can actually access. What the fund does is they basically look at how much you have within your retirement pot, your vested pot, your savings pot, as well as your retirement pot. So your vested, savings, and retirement pot, they look at the total fund credit and check that if you were to resign today, do you have enough money to actually settle the housing loan? If there is enough money and excess money, the excess money is what you can access. Right? I don't know if that makes any sense. So they need to basically look at whether if you take a loan, that loan, or if you make a withdrawal, if you make a withdrawal, that withdrawal should not put you in a position that you cannot manage to settle the loan, okay, the housing loan. I'll be retiring next year, December. Do I have to join the two-pot system? Short and sweet answer is no, you do not have to. You've got an option to, but we strongly recommend that you do not have to, that you do not do that. So basically, it's been structured in such a way that all members that are 58 and above are not going to be part of this. If they want to, then they're going to opt into it. So in your case, rather not opt into it, nothing actually changes. Whatever arrangements that you've had, those ones would be in place. The old rules would apply to your retirement fund, so you're pretty sorted. I'm on pension. How does this affect me? This doesn't affect you at all because you're already getting an income from your fund. Will our future statements from 1st September reflect vested, if any, savings and retirement splits? Yes. So the format of your benefit statements is going to change from next year going forward, or from September going forward. It's going to show your vested amount, your savings amount, as well as your amount sitting within your retirement pot. I'd like to know what happens to my money yearly when I don't withdraw from the savings pot. Does it accumulate or does it automatically get transferred back into the main pot? Your money accumulates within the different pots. I know why some members are actually asking this, because they now feel that now it's 3 different pots. How is interest going to be split? Am I not losing out on compounded interest? The truth, ladies and gentlemen, is that yes, you're going to get it on face value, you're going to see these amounts split into 3. But behind the scenes, this amount is actually invested in one pot. It's invested as a lump sum so that you don't lose out on compounded interest. Remember, that's interest on interest. So the full fund credit gets to be invested, and then the splits are done accordingly. So you will see a statement that will basically say, okay, on your vested amount, it was 135,000, now it's 170 something thousand, or whatever amounts, including the growth. The savings amount is this much, the retirement amount is this much. If you do not make any withdrawals from your savings pot, that money just accumulates. You are not forced to actually make a withdrawal. What they're basically saying is, there is a facility for you. Withdraw it if you want to. If you don't need to, just leave it there. It will be getting interest. Okay. Okay, if I withdraw, okay, why not? If I withdraw, will that reduce my years of service with the company? If you withdraw from your savings pot, no, it doesn't. Okay, I'm assuming that you most probably belong to a DB fund. Remember, unless if you're on a DC fund, years of service really don't matter. But if you're saying if I withdraw, will that reduce my years of service with the company? That really doesn't matter. DC fund, what you get at retirement is not determined necessarily by the years that you've spent, but how much you've actually put into the pot. Years of service are pretty much important if you're sitting on what we call a defined benefit fund, which is your old traditional funds. That's where they think about, where they talk about years of service, and that's where it really matters. Okay. I've finished at my employer end of June, and NMG have received my claim at the beginning of July. Why have my claim not been processed? Sorry, I finished at my employer end of June, and NMG have received my claim at the beginning of July. Okay, for this particular one, so what usually happens is, if the month that you leave, we're still going to wait for 1 month's contributions, and then they actually process the claim. So at any time, you should be getting this, but I'll strongly recommend that this member could just send us their details, and we can actually just check it out. I can take it upon myself to actually check out what's the delay, if there is any delay. Maybe you can just verify if we've actually received all the documents, and we can just sort it out. There usually is no glitch or any delay in processing, especially if we've got all your details. Okay. How will I withdraw all my money from the fund when I leave employee, as some individuals would want to open business or buy houses? Okay. How will I withdraw all my money from the fund? Okay. So as it is right now, the only way members can actually manage to access money from their retirement fund, I'm talking about before the 31st of September, is to make a withdrawal. But ladies and gentlemen, all these years we've been working, we've been saving for retirement. And all of a sudden, we've got the mind that we can make very good business people. I would strongly recommend that you see a financial advisor prior to making this decision, because we've got cases where members have actually made rational decisions, withdraw their money from their retirement fund. 3-4 months down the line, that money is actually gone. I'll give a typical example of a client of ours in Mafeking. There was actually 3 clients. Both of them decided to actually make a withdrawal, get into the taxi business, no insurance, there was accidents, breakdowns, and stuff like that. Those people are back looking for jobs. So we need to make sure that we make very informed decisions prior to actually making, we consult with financial advisors prior to making these decisions. It wouldn't be a very good idea for members to actually make withdrawals basically because of the introduction of the 2-pot system. Remember, the 2-pot system is only going to affect contributions that you're going to make post the 1st of September. And anything that you have actually contributed before, sorry, anything that you've made, any contributions that you've made before the 1st of September are not going to be affected. So it's overreacting if a member decides to actually make a withdrawal basically because of the two-pot system, because what you have right now is not going to be affected, okay? Do we have to opt in for the system? I'm 60 years old. Yes. At 60, you've got the option of opting in, but we strongly recommend you stay as you are. Don't make any changes because it wouldn't make sense for you to start taking your retirement fund money prior to actually going to retirement. So members that are 58 from the 1st of September, they've got an option not to be part of this, and we strongly recommend that they do not be part of this. If I'm going through a divorce, how is this two pots going to affect me? Is the withdrawal money going to be paid in my account by 1st of September? What if I have more than 30,000 in my savings pot? So the funds would only work on what we call a divorce decree, where they would actually instruct us to make the relevant split. So in some cases, it could be a divorce, and the divorce decree is saying we need you to pay 20% to the non-member spouses. In most cases, 50% to the non-member spouse. What we do from the funds side is we basically take equal portions from all three pots. So if you've got money within your vested pot, we'll make a withdrawal from the vested pot, a withdrawal from the savings pot, and a withdrawal from the retirement pot. Then your non-member spouse will be paid out. Okay. It's pretty important that if you've got a divorce order, you just notify the fund prior to making any withdrawal from the 1st of September, withdrawal from your savings pot. Okay. What process are we going to use to access the money? Is there any app that we are going to use, or is there any other alternatives that we're going to use to access the money? That has been answered already. We've mentioned that there are 3 different options. You've got the forms, the traditional way, not so highly recommended because it takes longer. You've got the portal, the NMG portal, as well as the WhatsApp app that we've discussed intensively. For us, okay, if I do not want my money to go into the savings pot, will this be allowed? Unfortunately, the funds are going to be structured in such a way that there is a savings pot and there's a retirement pot. I'm liking this question because now members seem to be getting aware that the savings pot might not necessarily be the best option, and most probably trying to run away from it. But unfortunately, funds are going to be structured in that way. If you don't use the facility, then it's not going to really affect you. So what they're basically saying is the facility is there. If you want to use it, use it. If you don't, it doesn't make a difference. All right. You can also make transfers where you can say, I can transfer money from the savings pot into the retirement pot if you feel you're not disciplined. There are certain individuals that when there is money available, there is always that temptation to actually make a withdrawal. If you feel you're one of those, then what you might need to do is just to transfer the money from the savings into the retirement pot. Unfortunately, you can only transfer from the savings into the retirement pot, but not from the retirement pot into the savings pot for obvious reasons, because now you've got an option of transferring into the savings pot. What most of us are going to do is, if we really need money, we're just going to transfer from the retirement pot into the savings pot and make a withdrawal. So it can't be the other way around. Okay. After 10% is transferred, do we have access to the vest pot? If not, what happens to the money we've saved to date? So after the 10% is transferred, the money sitting within your vested pot still remains there. It still gets to be invested, like I explained. You still get your investment growth. You still get a statement that actually shows you how much you have within that particular pot. So nothing really changes. So when you decide to leave the fund, it's up to you if you really want to take that money. Remember, the old rules would apply, so you can make a full withdrawal of your fund credit that is sitting within that pot at whatever time. Okay. Members do not know what marginal tax rate is. Does this apply to employer and employee contributions? How do I top up my savings pot? Okay, I'm seeing 3 questions in one. Members do not know what marginal tax rate is. Okay, with this one, what we're trying to do is through the WhatsApp app, it's actually, you'll realize once you get into it, marginal tax rate is intensively explained. Members even have an option of actually asking. You can actually literally type, like what we do on Google, and say, what is the marginal tax rate. It actually gives you an explanation. And it will even go further because we've got your details now. It will actually tell you what your marginal tax rate is. And if you're going to make a withdrawal, you can have an idea upfront of what tax you would have actually paid. That's the first question, first part of this question. Does this apply to employer and employer contributions, the vested part? Yes, it applies to both contributions. So the combined contributions, let's say whether you're on a TCC structure or whatever, and your combined contribution rate is 900 rands per month, you'll just split it to 1/3, 2/3. How do I top up my savings pot? So additional voluntary contributions on funds, AVCs, will still be available, funds if you have already had them. So what they'll basically do is you've got an option of saying, all right, you sign the forms, put in your AVCs, but unfortunately, they're still going to be split. So if you have an AVC, an additional voluntary contribution of 900 rands, they're still going to make the split of 1/3, 2/3. But get to think of it. It doesn't really matter if it's going to be split or not, as long as you're not going to access. So what you can basically do is say, all right, I do not want to top it up in this particular part at a later stage, and then they can just transfer it to the other, because you've got an option of actually transferring. Like I mentioned earlier on, you can't transfer from the savings pot you can't transfer into the savings pot, but additional voluntary contributions are an option. If I withdraw from the 1st of September, a portion, then get new employment in November, will I be able to withdraw my money? So if I withdraw from the 1st of September, a portion, right? Then I get new employment in November. Would I be able to withdraw my money? Okay, so there's two parts to answering this question. The money that you've had within your vested pot, you can still manage to withdraw it. The money that you have within the savings pot, you can still withdraw it. But if you've made a withdrawal already, so let's say in September, you've made your withdrawal from your savings pot, you cannot make a withdrawal within the same tax year again within that period. I don't know if that makes any sense. So when you withdraw, when you leave your employment, you can still take your full fund credit from the vested pot. And if you've already made a withdrawal from the savings pot, you can only withdraw in the following year. And then what you have within your retirement pot, you cannot manage to make a withdrawal. You can only manage to make the withdrawal only at retirement. Yes, number 29. Are there any admin fees charged? Yes, there will be admin fees charged. I did mention that 2.5% of your amount will be charged, and it's kept at 600 rands. What will happen to the savings pot upon retirement? Good question. So Martin has saved all these years, but money is still sitting within his savings pot. When I go on retirement, I've got an option of taking all my money within my savings pot as cash, or if I want, I can just use it to top up the money that's sitting within my retirement pot and purchase an annuity that will give me a bigger income. Because remember, your annuity income is dependent on how much you actually save or how much you have within within your retirement pot. So if you've got a savings pot and a retirement pot, you can take that money, put it into your retirement pot, get a better income, or alternatively, you can just take the full fund credit in cash and walk away, subject to tax though. What happens to your pension money once you leave a company for many reasons? If you leave the company for whatever reason, and I think we've explained this as well, but for whatever reason, what you have in the vested pot, you can take it out. What you have in the savings pot, you can take it out. But what you have in the retirement pot, you can only access at retirement. Okay. Hi, so then what happens to the money in the savings pot if I'm to resign after September? If I resign 5 years from now, what happened to the contributions that was put into the savings pot? Whatever it is that you've put into the savings pot, 5 years, 10 years down the line, you can make a full withdrawal of the money. What you have in your initial vested pot, you decide to leave the fund, you can take it out. The only amount that you cannot take is money that's sitting in your retirement pot, and you can only get it after retirement. Okay, 37 has been answered already. 38, we've spoken about this intensively. What is the percentage that will be placed into your savings pot monthly? It's actually a third of your contributions. Okay. Retrenchment and unfair dismissal are completely out of my control. And my money, I know where this question is going before I even go with it. And the money I've saved is lying in the savings and investing. But I, the contributor, I'm struggling to get a job. It's not that is that not pure suicidal? It's true. I completely disagree with the idea that if you are retrenched and your money is sitting within your retrenchment, within your retirement pot, you cannot access. It doesn't seem to be fair because retrenchment happens to the best of us, and retrenchment happens to the best of us, and retrenchment is actually beyond our control. So it would be pretty unfair for members not to manage to access the money, especially if it's the only money that you have left. So, like I said earlier on, a submission has been put across. They are re-looking at this. So hopefully sometime next year we'll know they're most probably going to reverse and get to be lenient, especially when it comes to retrenchments. Okay. Can NMG administer my fund after retirement? If yes, at what percentage? If this once off, is this once off or monthly? And what is this fee for? All right. Administering your retirement fund after retirement, we're talking about purchasing an annuity here. So through our financial planning division, you can be assisted to purchase an annuity. The fees are basically negotiated between yourself as well as the financial advisor. It also depends on the products that you take, whether you take a living annuity or a conventional annuity, living annuity, or a guaranteed annuity, single life annuity. All those different products would actually have different fee structures, and those are negotiable between yourself as well as the financial planner. With certain funds, we also have default annuity structures. So I'm not sure of your specific fund. If your fund already has a default annuity where members from that specific fund automatically get into that particular default annuity, those funds have already put those fees have already put into place, and the different products, it's a matter of choosing which products would be available for those members. So it's actually dependent on the arrangements that you have. But yes, NMG can assist you in both ways, whether you've got a default annuity strategy in place, or if you want to take up a separate annuity through our different in-house products. Will we get investment growth equally across all three pots? Yes, explained earlier on. Behind the scenes, all this money is invested in one pot. You get similar declarations throughout. Okay. At the end of the day, what they're trying to ensure is that members do not lose out on compounded interest. How long does it take for the member to reach my account after that's been answered? What if I don't want to be part of the two-pot system? Unfortunately, we are all forced to be part of the two-pot system, unless if we are 55 and 58, 58 and above, as in the 1st of September. I wish it wasn't there. We all affected by this, and unfortunately, we do not have any choice. Can we have the WhatsApp contact? That's basically going to be available from the 1st of September. What's the WhatsApp number that will also be available from the 1st of September? Is the portal already updated? The portal is updated when it comes to your fund credits as at now, as it would always update on a daily basis. But the splits will only be updated after the 1st of September. Okay. If I have 400,000 by 31, can I withdraw 120 or maximum is 30,000? Maximum is 30,000. We're not talking about withdrawing, we're talking about seeding. Seeding, you can only seed up to 30,000, which is the amount that will be transferred into the next part. It can only be up to 30,000, and unfortunately, they can't seed anything above 30,000. Okay. Like we mentioned right in the beginning, this is meant to actually put in control and ensure that people don't make massive withdrawals at the expense of the old people that they're going to be in the next couple of years. So there had to be some form of control in ensuring that there is a cap of how much can be seeded. Okay. All right, can I have the portal website details? What you can basically do is just download the app, go to Play Store, you go to the NMG, you just type in NMG, there's the NMG app, you just download that and you'll have it on your smartphone. Coincidence, we're actually on question 54. We just answered question 54, and which is the last question, and it's actually exactly 3 o'clock. Ladies and gentlemen, thank you very much for being part of this webinar. I hope you found this fruitful. What we're going to be doing, like I mentioned earlier on, we will be doing a list of all the question and answers from all the different sessions. We've had 5 sessions. I've been doing them in different languages during the course of the week. So what we're going to do between now and next week is just to combine all those questions, do a full-on Q&A, and then send them through to yourselves. You also have access to the recording of this particular webinar in case maybe you need to recap on a few other items. Right. This is where I end. Ladies and gentlemen, thank you very much. I hope you have a wonderful day. Goodbye.